Student Loan Forgiveness 2023. Going to post-secondary school has been positioned as a huge opportunity for all of us as we grew up. A college degree equals better job opportunities, a higher income, and a better chance of living a happy life. For some, it's what's expected of them because both of their parents earned bachelor's degrees and it worked out well enough for them, so you should do the same. And for others, it could be the push to become the first college graduate in their family as a symbol of hope for a better future, better jobs, and working towards generational health. In any case, the message is clear. Post-secondary education is the most straightforward and stable way to get a good job and have a good future, and people will pursue that path no matter what. The problem is that there is a predatory system in place that can effectively defeat the entire purpose of the degree while also causing the system to fail to function as intended. Student loans are a part of that system. If you hear student loans and predatory systems in the same sentence and disagree, please give us a second to explain student loans. Hello everyone and welcome to our channel. Before we begin, please do us a huge favor and click the subscribe button below this video. Actually, it wasn't always like this. Initially, student loans were intended to encourage more people to attend post-secondary school and to provide more access to people who could not previously attend due to financial constraints. Looking specifically at the United States, student loans took off in 1958. This was after the Soviet Union beat the Americans to space, and the US wasn't happy about it, so they decided to do something about it. They introduced the Federal Student Loan Program in which people could borrow up to $1,000 per year to attend college, and this was a huge catalyst for people actually attending post-secondary school and earning that degree, which is exactly what the government initially desired. Things looked good for a while, and the economy was expanding, but as more people went to college and demand increased, the cost began to rise as well. This resulted in larger loans being taken out and more people enrolling in more expensive colleges, until things spiraled out of control. During the Great Recession, all of this reached a tipping point. Throughout the 1980s, 1990s, and early 2000s, the cost of post-secondary education was already rising, as were student loan debts. The total student loan debts in the United States was just under $500 billion in 2006 and 2007, but everything was pushed to an even higher level during the 2008 financial crisis. Consider this. People were losing their jobs, they had no money, and everything was in disarray. So many people decided to say, hey, maybe I should go to school or go back to school and then maybe I can use that to find a job. And that's exactly what they did. College enrollment increased more than ever before. And here's where things get really messed up. Between 2008 and 2018, college costs increased by 25%, which is a lot, but not when compared to student loans, which increased by 107% during the same 10-year period. And that's what got us to where we are today. As of 2022, the United States has over $1.75 trillion in student loan debt. And yes, that's trillion. That debt is now distributed among 44 million Americans, meaning the average amount of student loan debts that people have is close to $40,000. And obviously, there are people who have a lot more than that. And this problem isn't limited to the United States. People in Canada have student loans as well. With a population 10 times smaller than the United States, the numbers don't seem so extreme, but approximately 2 million Canadians owe $22 billion in federal student loan debt, with the average outstanding loan being around $13,000. Student loans haven't just gotten out of hand in terms of how much debt people are taking on, despite the fact that the student loan system itself has become a really nasty trap. This trap began when the federal government of the United States changed the way it handled student loans. They used to partner with banks to make low-interest loans to students, but the banks made a lot of money from this, like billions of dollars just being involved. So, in 2010, the government realized that this wasn't necessary spending and cut off the banks, so students worked directly with the government to take out loans. When it comes to loans, the Department of Education has surpassed many banks in the United States, just as Starbucks has surpassed many banks in the country when it comes to cash holdings. The real issue here is that the government still had to outsource the loan process, which is where loan services come in, and it's also where predatory behavior comes in. Loan services are essentially the new go-between for students and the government. They manage student loans on behalf of the federal government, so even if a student takes out a federal student loan, they must work with this private company to repay it. In theory, these services exist to assist students in collecting bills and ensuring that they are paid on time, as well as to provide information about various repayment plans. Unfortunately, these various companies began focusing solely on maximizing their profits instead, which is not surprising. One example is that customer service representatives were expected to spend no more than 7 minutes per phone call, which is obviously not enough time to explain to someone all of their different options and actually discuss the best option for them, especially if they are struggling to pay off their loans. So they didn't. Instead, they simply suggested the quickest option, which was typically putting your loans on hold. This meant that these people stopped paying off their loans, which cost them a lot more money in the long run. There's also an issue of income-based repayment plans. In theory, it sounds great if you have a lower income because you can pay less money monthly towards your loans. But the problem here is that interest accumulates, so all of the money you pay towards your loans every month barely covers the monthly interests. In fact, some people on income-based repayment plans see their balance increase month after month. Still, how would that issue ever be resolved? It simply feels like quicksand. We're sure you get the point. The current student loan system is a shambles, and we believe that many people would agree with that. What should be done about it is where the disagreements in the debate arise. Student loan forgiveness has been a hot topic for several years, and people are extremely passionate about it, owing to the fact that it affects everyone. 1 out of every 8 Americans has student debt, and everyone else without it pays taxes and feels personally invested in this, bears the burden of having paid off these other people's student loans. Most people think it's a good start. It's not everything we'd like, but it's a good start. There are now three main sides to the conversation. One, people who still have outstanding loan debts that they are struggling to pay off. Two, people who've already paid off their student loan debts or are struggling with it. And three, people who never took out student loans to begin with, whether because they could pay for it without it or because they never went to college to begin with. Some people agree that the student loan system has flaws, but why should everyone be forced to pay for the mistakes of others? Why should someone who never attended college have to pay for someone who got a random philosophy degree and couldn't find a high-paying job? Why should people who chose an engineering degree because it was the smart choice and then works extremely hard to pay off their student loans have to now pay for someone else's student loans while receiving no benefit themselves? Others support loan forgiveness because of the predatory practices that we discussed earlier, as well as the fact that student loan forgiveness would primarily benefit those who chose a bad degree. For example, one significant aspect of the story that is frequently overlooked is that nearly 40% of the 44 million people with student loan debt never complete their degree. That means that millions of people have mounting student loan debts and no degree to leverage for a higher salary to help them pay it off. As previously stated, the entire point of higher education is to obtain the degree and then leverage it for a higher salary that you would then use to pay off the loan. However, if you are unable to complete your degree, you will have debts and no higher salary, trapping you in a difficult to escape situation. When people hear this, they may argue that it was their bad decision to take on debts and not finish their degree, and that they should be forced to pay for the consequences. Why should my tax dollars be used to assist them? This is where the fairness argument comes to play. The problem is that most government and social programs are not fair in the sense that they do not affect everyone equally. Like if we look at the government providing this type of assistance to businesses that make mistakes and require assistance, do we retain the same level of rage? There's also an interesting article by this Harvard professor who stated that they were previously opposed to student loan forgiveness, but now believe that debt cancellation is necessary. They changed their minds because they realized that so many people say it's not the best solution, but then they become paralyzed from doing anything to fix a system. It's the classic let's do nothing instead of doing something scenario. They even concluded the article by saying that student loan forgiveness is not only justified, but that government policy should work to reverse it. Finally, in 2022, after years of debate and many people believing that it would never happen, the current president of the United States announced that loan forgiveness is taking place. President Biden announced his long-awaited plan to forgive student loans for millions of Americans, and there has been some movement in Canada as well. They will eliminate interest on student and apprenticeship loans indefinitely. Not all student loan debts will be forgiven under the American plan, but anyone earning less than $25,000 per year will have $10,000 in federal student loans forgiven, and any low-income students eligible for a Pell Grant will have $20,000 in federal student loan debts forgiven. So for anyone who is eligible to have $10,000 forgiven, if you have $6,000 in federal student loan debt left, you'd have the entire $6,000 cleared, but you won't get the additional $4,000. This plan will almost completely eliminate student debts for approximately 20 million people, making a significant dent in the 44 million people who have federal loans. It will especially benefit those who do not complete their degrees. Actually, approximately half of those with less than $10,000 in debts never receive their degree and will have these loans completely cleared. And it will also assist approximately 5 million people whose loans are currently in default. Overall, the $10,000 forgiveness is most likely to completely eliminate debts for people with at least education, and approximately 90% of the benefits will go to people earning $75,000 or less per year. There are a few things about this plan that we found particularly intriguing. One is that while it obviously does not forgive everything, it does fall somewhere in the middle of the two extremes. One group desired that everything be cleared, while the other group desired nothing to be cleared. Another thing that's really interesting is the discussion about whether now is the right time to do student loan forgiveness, because inflation is so high right now. We are in a recession, so people are worried that if we cut back on student loans and all these millions of people don't have to pay them anymore, they'll have more money to spend on the other things and put it into the economy, which could potentially drive up inflation. The one rebuttal was that student loan repayments had already been paused for the previous 2 years, so there was really no difference. Also, the student loan repayment pause will end in the new year, so anyone who still has student loans to repay will be kind of offsetting it by continuing to pay their student loans. There will always be some people who benefit more from previous policies and programs in place, but just because it does not benefit every single person does not mean it's not having a positive impact on society as a whole. The other thing we believe is that simply forgiving student loans without addressing all the different factors that contributed to the crisis in the first place is not ideal. If predatory loan services are allowed to continue their practices, and income-based repayment does not begin to actually reduce the principal balance, and if colleges do not begin to become more affordable, and if we do not begin to educate 17 and 18-year-olds in how the entire system works, without all of that, the problems will reoccur, which is why Canada's update on permanent loans is so important. We'd like to know where you stand on this issue, so please let us know in the comments section below. If you like this video, please give it a thumbs up and don't forget to share it with your family and friends. Thanks for watching!